Gold is really important, far more than the price would lead us to believe, because the most well-informed traders in the globe, their actions say that. Forget about price. That's the easiest way to misdirect the public. You misdirect them with volatility, rhetoric, and price action, yet it continues to go higher. But with a great deal of volatility, it's not sexy and moving up, triple digits like Bitcoin is, but it's outperforming every traditional asset and nobody knows it.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here at the 2025 Rule Symposium in Boca Raton, and I am here with Andy Schectman of Miles Franklin. Andy, thanks for coming back on the show.
Good to see you, brother. Thanks for having me, man.
Thanks for coming
now
back
a couple,
on the show.
2-3 years in a row we've done this.
Yes.
Nice to see you again.
Yeah, it's good to see you as well. Let's start off like we always do, and what is your macro view of the world economy and financial markets today?
I think we're in the midst of a gradual reset, a move away from opaque debt instruments issued on a promise, one that is moving towards transparency like blockchain, commodities, and physical possession of said commodities. Um, Removal of counterparty risk. I think the weaponization of the dollar had profound effects globally on not only the dollar, but more relevant, the Treasury market. I think we are seeing, this isn't a word, but if it were, it would be called de-treasurization, in favor of things like gold, which has not only doubled its performance over the last 25 years. Look at last year as an example, gold up 40%, Treasury up 4%. You look at this year, gold up 30+%, the Treasury up 1.5 so far on a year-over-year basis, but the dollar's down 10%. The dollar is falling, interest rates are rising, gold is going higher, but we see a trend of repatriation and delivery, whether it be the commercial banks repatriating their gold from the Bank of England and the New York Fed, or massive players draining the LBMA and huge deliveries coming off the COMEX. For the first time ever since November, the United States is a net importer of gold. Who is importing nearly $100 billion worth of gold since November into the United States? Into COMEX, most of it leaving the exchange. So if I were to encapsulate everything I just said, it's a shift away from Western dominance. It's a shift away from treasuries. It's a shift away from dollars in favor of commodities traded over a blockchain network. That's ultimately where I think we are going, whether it be what we see happening in China with the internationalization of the yuan and the ability to take delivery off of a series of now multi-jurisdictional hubs for the Shanghai Metals Exchange that they're building, and first one in Hong Kong, next one in Saudi Arabia, and a slew of them throughout Asia and Africa, and ultimately South America, or whether it be what we see here on COMEX, huge deliveries, metal coming in and coming off of the exchange. All of it points to the same thing to me, and that is a new system, a gradual reset, a system that is moving away from what was to a new system that will be dominated, as Zoltan Pozsar calls it, Bretton Woods 3, commodities and blockchain, and the marriage of those two things, if I had to guess, is where we are moving in what is now not such, it's moving at a faster speed. It started out very slow. It's starting to accelerate. And I think by this time next year, it will be much stronger. I really do. In fact, one of the slides I played today in my speech, the last slide, was Judy Shelton on my show, who was Trump's nominee to run the Fed in 2016. Many think she'll replace Powell this time. And she said to me, and I played the slide on my video with her, that she believes, after discussions with President Trump, that on July 4th, 2026, he will issue, she says he's going to make a huge deal of that, the 250th year anniversary of the country, that she believes he will issue, starting with 50-year treasuries denominated and redeemable at maturity in gold. So I think we're moving into a system where gold is being remonetized, being brought back into the monetary system, and a move away from promises by a country that is insolvent and has done too much to anger the world through weaponizing of its systems.
Yeah, I think probably one of the dumbest things that they did was stealing those treasuries from Russia. Right. That accelerated exactly what you're talking about.
Well, and look at it from the perspective of the rest of the world. First, I want to say, I'm a patriot. This country has done more for me than I ever deserved. I'm the least likely person to be sitting here having a discussion on economics with you than anyone I know. But because of hard work, and as my sixth grade teacher used to say, stick-to-itiveness, and the opportunities this country gave me, I thank God every day I'm an American who was born here. However, look at it from the rest of the world's perspective. Look at Iraq as an example. We invaded it 22 years ago under the pretenses that there were weapons of mass destruction. We're sorry, they're not there, and we destroyed your country. We toppled your regime. But guess what? We're still here. Hi, 22 years later, sanctioning their banks for trading with Iran. And so much so that they've made it angered the Iraqis so much that they've, as of January 1st of last year, there are no green dollar bills anywhere in the country. They're gone out of every bank. And if you own a business in Iraq and trade in dollars, you'll go to jail and they'll seize your business. So, the point of it is that the rest of the world might look at us as being hypocritical, that the world reserve currency's prerogative is not to be judge, jury, and executioner. You're supposed to be impartial. And many people would look at the things that we have done and say, no, they're no better off than President Putin. And I'm not passing judgment on the war in Ukraine and Russia. But what I am saying is that why is it our prerogative to pass judgment on what he does or what they do? And yet what we do arguably is every bit as egregious by many people around the globe's estimation. And yet we're the ones who can say, no, that $5 billion in treasuries that you bought, that we guarantee that we're holding, we're going to default on it and say, nah, it's not yours anymore. But guess what? We're going to give it in the form of weapons to the Ukraine, country in the middle of a war against. How do you come back from that? And you know what? The European Union is no better. They, instead of outright confiscating treasuries, they have European treasuries and they confiscated all of the interest. And instead of giving them the interest, they, again, gave it in the form of loans to the Ukraine. So the point of it is that when you are the world reserve currency, you should be impartial and you should be held to the same standard as everyone else. And I think that's pissed off the world, and rightfully so. I'll say it again. I love this country, and I thank God every day I was born here, and I'm still very proud to be an American. Thank God, actually. But you have to look at it from the opposite side. It's like you're accused of murder, murdering your wife, and the attorney says to you, Steve, I trust you. I don't even need to know what the plaintiff's argument is. I just want to hear what you have to say, and that's what we're going to go on. You would be foolish not to understand the other argument. And I think the other argument is that we're not impartial. We're just as bad as other countries, if not worse, in their estimation. So why would anyone want to take our dollars that are being inflated or hold our treasuries to benefit us, which can not only be taken or sanctioned, but you look at the actions of the Federal Reserve, who would come in and buy treasuries, right? So like they just did a few weeks ago, they print money. They bought 48 trillion in 3, 10, and 30-year treasuries. So they print money to buy the treasuries to lower rates. But the point of it is a country like Saudi Arabia has to use sweat and effort to pull oil out of the ground and sell it to us for dollars, which we can create, and then put their reserves in treasuries, which we can buy with created dollars. It's just the whole system is coming to an end because for a long time, even though our currency wasn't backed by anything, we were trusted and revered. And I would argue, largely from the actions of the last administration, which were too stupid to be stupid, this administration is doing the same thing, only they're not as stupid and overt as the previous was. But for example, by Trump saying to the BRICS nations when they're having their meeting this week, any of you who join in, you'll get another 10% tariff. That's not a tariff. That's a sanction. A tariff is something you put on to protect your manufacturing. That's not what he's doing. He's pissing off the rest of the world on a different level and cementing and reinforcing the mentality that's brought them all together to begin with. And that is coercion, bullying, sanctioning by a country who is running the largest debt that the world has ever seen, that has 200 trillion in debt when you talk off balance sheet Medicare, Medicaid, Social Security, government military pensions. People need to know a trillion seconds ago was 31,688 years ago. So we are wholly broken, insolvent. We're hypocritical by everyone else's estimation, and we are passing rules to the rest of the world that if you don't align with us, well, it's more of the same, sanctions. And I think that's growing old on a large portion of the world's community. The one thing that I talked about in my presentation, Steve, that no one is talking about is the comment that Sergey Lavrov just came out with, and that has to do with their new bridge technology, which is the M-Bridge, which they've just rolled out to 38% of global GDP in the Asiatic countries, those in Southeast Asia, and 5 countries in the Middle East, that they are using to internationalize their yuan. A lot of talk lately about the yuan, which is now convertible into gold through the Shanghai exchange. But this is the precursor to the new BRICS settlement system, which we've already been told by Dilma Rousseff, the former president of Brazil and the head of the BRICS and Development Bank, that they've agreed upon in principle. The Shanghai Metals Exchange is opening up a series of vaults throughout the world, multi-jurisdictional in Asia and Africa. The first one is Hong Kong, the next one's Saudi Arabia. They'll be in the Middle East and throughout the world so that they can internationalize the yuan. But the one thing that no one's talking about that everyone should is Sergey Lavrov came out. He's the Russian foreign minister, and said that we are opening this technology, this bridge technology, up to non-BRICS members, but it is not compatible with the pound, the euro, or the dollar.
Huh.
Think the Belt Road Initiative, 75% of human population, 50% of GDP. They're not in the BRICS, they're aligned with the BRICS. Think the Shanghai Cooperation Organization, the largest regional military and financial group in the world, 50% of human population, 35% of global GDP. Think the BRICS. All of these together, the Eurasian Economic Union, these countries in Southeast Asia, these Asiatic countries, in the Middle East that have already signed up, this settlement system settles in 7 seconds with a 98% reduction in fees. The SWIFT system takes 3 to 5 days to clear, and you have to convert to dollars. And back here, you use your local currency, you trade it over the bridge network. In 7 seconds, it clears, and it is not compatible with the West. Everyone says the BRICS aren't big enough. Okay, well, Lavrov says we're opening up to non-BRICS nations. Think the Belt Road. Think the Shanghai Cooperation Organization. Think of all of these countries that comprise pretty damn well near 90% of human population. 3 of the 4 largest nuclear arsenals. The center of manufacturing, with China and Vietnam as the 48th country that just applied to the BRICS. Think of all of this stuff, and now you open it up to these players where you trade in your local currency to stimulate your own economy. You don't have to go back and forth through the SWIFT system into dollars. You settle imbalances in gold through a series of multi-jurisdictional metals facilities where every country puts a little bit of their gold in all of these hubs. And now you settle any imbalances once a quarter or once a month in gold instead of using treasuries. In essence, gold isn't replacing currency. It's replacing what backs the currency, treasuries.
Yeah.
So every country uses their own currency, which makes them keep their monetary house in order and settles imbalances in gold. And this, to me, is the beginning of a new trend. This is the beginning of a reset.
Yeah.
It's a reset that's slow moving. Everyone thinks reset means like a video game. You press reset and it starts over. No, reset has already been pressed, but it's the slow moving chessboard, all the pieces being put into place. So when it finally does actually fully reset, there's nothing the West can do about it. And I believe that in my soul. I just gave a 45-minute presentation that encapsulates that. Kind of hard to do right here, but everything I'm seeing, everything Steve tells me, that's where we're going.
I remember years ago when we first met. It was when I was transitioning from a poker podcast to a financial one. You were one of my first guests that kind of helped me jumpstart the show. And you were talking about Basel III.
Yep.
We've now come up on that.
Yeah.
Give us a brief overview of what happened.
Well, in essence, gold is considered a tier 1 asset, which is as good as cash. Now, it works that way for your liquidity ratios. They're playing games with it, in essence. For capital ratios, it's still not tier 1 high quality liquid asset. For liquidity ratios, it is. In essence, the only things that for capital ratios that work are treasuries and common stock. It's the legacy system. In every other respect, in particular the way the banks are looking at it, it's the same thing as a treasury. It's the same thing as cash. It is, as of July 1st in the United States, it is a high quality liquid asset tier 1 for liquidity, meaning you can loan against it. It's as good as cash. It has a 0 weighted risk, I guess you call it, I don't even know the word I'm looking for. It is a 0 risk, and it is good as cash. For your the ability for it to be considered cash or as good as cash, it would have to be a bond or common stock. Now, it's doubled the performance of the 10-year Treasury for 25 years, and it beat it by 36% last year, and it's killing it this year. So it's just a bunch of horse crap that the banks still are clinging to the fact that the legacy system, treasuries and common stock or preferred stock of these corporations would be considered tier one. In every other respect, it is tier one, it is HQLA. The capital ratio says, well, it's got to be stock or bonds, but the liquidity ratio on your balance sheet says, yes, it's as good as cash, it's as good as bonds, and has a zero weighting in terms of risk asset. So what did it mean? It just simply means that gold is gradually being reintegrated into the system and being acknowledged by the central banks as such.
Scott Bessent, our Treasury Secretary, he's mentioned that he sees another Bretton Woods
Yep.
and he kind of wants to be a part of that.
Yep.
You know, he's already
I
put the
just
feelers
gave that
out there.
quote in my presentation. That's exactly what he said.
Yeah, yeah. What do you see coming? What do you think they're going to do?
You know, he also, his largest holding was gold when he ran his hedge fund. And he also said, although he's backed away from the gold part of it, and I think someone said, what the hell are you doing, Scott? Because he said, we're going to remonetize the asset side of the U.S. balance sheet. Look at the U.S. balance sheet. I would challenge everyone to Google United States government balance sheet. What you will find is $5 trillion in assets backed against $200 trillion in liabilities. Of those $5 trillion in assets, the largest asset, the United States government, not the United States, United States government, the largest asset is student debt. Over 40%, about $1.5 trillion, is the single largest asset of the United States balance sheet. Number two is military. Military bases, guns, bullets, aircraft carriers. Now, these two things you're not monetizing.
Yeah.
Okay. The third is land. Okay, you could put some hotels or national parks or amusement parks or whatever. You can monetize, but what else? I don't know. So everyone assumed he was talking about gold. Gold is held on the United States balance sheet. You can't make this shit up. Pardon me. I'm sorry. You can't make this up. It's called the gold revaluation account. That is the name of the account that gold is held. That's the name of it on the U.S. balance sheet, the gold revaluation account. Everyone assumed that's what he was talking about. And he kind of said, no, that's not what I'm talking about. I think someone got to him and said, Scott, what are you doing, man? Because the U.S. has become a net importer of gold since November, erasing a long-standing trend of being a net exporter. Since November, we've imported, that they've reported, just shy of $100 billion in gold. Since November, month over month over month over month of larger and larger and larger deliveries into COMEX, most of it leaving the COMEX. Who's buying it? Where's it going? In May, it was the largest delivery ever in the history of the COMEX market in both gold and silver. Over $8.5 billion worth of gold was delivered on the May contract. Who's got that money? There are people standing for delivery in this country that never, ever, 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 ever did before. And who is it? Then you get Trump, who comes out and says, he who has the gold makes the rules. He said that on a tweet on Easter Sunday, the golden art of negotiating. And then you have Judy Shelton, who I just had on my presentation, the last slide. Judy Shelton, I interviewed on my channel, and she was Trump's nominee to run the Fed in 2016. She didn't get confirmed due to partisan politics. A lot of people, including myself, believe she will be number one or two in the running to run it this time when Powell leaves. Her book, As Good as Gold, says the advocates for 50-year treasuries, starting with 50-year duration, redeemable at maturity in gold. On my podcast, I pressed play, a 1-minute segment for everyone to hear. She said, Trump and I have had discussions when I was part of the transition team, and we've talked about it a lot. And he's gonna make a very big deal of next July 4th, 2026, the 250th year anniversary of the country. And she said flat out on and I played it for everyone here, it's my belief that they will issue 50-year treasuries redeemable in gold. Now, the first step in doing that would be to bring back all the gold. We'd become net importers month over month, massive amounts. Someone said to Scott, what are you doing, bro? You're not supposed to say this yet. Yeah. And that's why he backtracked off of, well, I wasn't talking about gold. Yeah, right. You were talking about gold. There ain't anything else they can monetize on the balance sheet. Maybe some land, some parks. Okay, great. That ain't going to do it. Yeah. So, and then I said to her, Judy, do you realize that gold is held in the Western balance sheet in an account called the gold revaluation account? She says yes. Do you think gold will be revalued? And not in so many direct words, she said, yes, I do. James Rickard here says 24,000. Now, I'm not saying that's going to happen. Who would it benefit? Every central bank on the planet who's been buying it voraciously since you and I started talking 4 years ago. Every central bank is gobbling up gold. It would benefit every single one of them. Why 24,000? He has a formula of dividing M1 into the amount of gold, etc. But every $4,000 increase in the price of gold would give the Treasury General account $1 trillion free and clear. And the way that that works, without getting too deep into the weeds, is that the Treasury would issue gold certificates to the Federal Reserve for that amount. The Federal Reserve would then safekeep the gold and would give the print money and give the Treasury, in this case, $6 trillion free and clear, that they could use to pay down the balance sheet or to issue treasuries, whatever it may be. Now, the Fed does not have access to that gold. It still belongs to the Treasury. What they do have claim on is the fiat value of that gold. That's what those certificates mean. So it's a gimmick. It's a accounting gimmick that would create lots of inflation, but would start to allow the U.S. to pay down its debt. And think of what Judy says. Next July, he's going to issue 50-year treasuries. So you got a 50-year runway, of course, as well. But you need to have the price higher. So will they revalue it? Will it be issued? Because who's buying our treasuries? Nobody. They're selling treasuries at record levels. It's the lowest holding of treasuries ever. And now we have the United Kingdom is number 2, right? And in 3 or 4 is the Cayman Islands. So you got 2 of the most indebted countries on the planet buying each other's debt, the U.S. and the U.K. What could possibly go wrong there? It's like 2 drunk guys holding each other, leaning against each other to hold each other up. China is slipping to number 3. They only have 700 billion in treasuries. They used to have nearly 2 trillion. They're selling treasuries and buying commodities, buying tangibles. China's going all around the world. They're the largest producer of gold in the world and number 2 in silver, and they're going all around the world. Go talk to Sean Kuhn here, Dolly Barton. He'll tell you that they're flying all around Latin America buying doré and concentrate directly from the miners, which disintermediates the marketplace entirely, and sending it, paying double what the West will, sending it back to China to refine it. And this is the largest producer of gold in the world and the second largest of silver. So why are they going and buying doré and concentrate, paying over market price and sending it back to refine it if it's just an archaic relic of the past? The point of it is that it's the same reason why you saw Saudi Arabia and China get caught lying about how much gold that they've imported on the import-export numbers. Oh, sorry, we made a mistake. But if the People's Bank of China buys gold and it's 999 pure, it has to report to the IMF. But what if they buy doré and concentrate that isn't? Well, they don't. What if the PBOC uses proxy banks, like a commercial bank, to buy it in the form of a sovereign wealth fund on behalf of, well, they don't need to report that either. And what if the People's Liberation Army buys it, which they buy tons? They don't have to report it. So that's why you're seeing articles come out saying that these numbers are 10 times understated to what the central banks are buying. My point to you is the central banks know the playbook. They're gobbling it up. So revaluing gold would benefit every one of these central banks. And yes, it would benefit those that we could argue are maybe borderline adversarial with us. But at the same time, what choice do we have? How do you get people to want to take our treasuries, which we need because our debt keeps growing? How do we get them to take our treasury when we're broke, we're insolvent, we're not fixing? Doge came up with 80 billion in savings. That's 36 hours worth of money printing in this country. Nothing. How do we get the world to want to take our treasuries? Well, we import all the gold, we reshore all the gold, we let the price rise, maybe revalue it, peg it to a 50-year treasury, which gives us more runway and it's redeemable upon maturity. Now, she said that he would also issue shorter denominations later. But the point of it is that gold, in my mind, 1,000% is replacing the treasury. That is what it's not replacing the dollar. Local currencies, all these other countries ultimately will do that. But what it is replacing is the treasury, which is, in the scheme of things, more important to the government, to this country, to a country massively indebted, than the dollar is in being used for commerce. I think it's one of these moments we'll look back on, your children will look back on and read the history books of what once was the empire of the United States, where everyone took dollars and used treasuries to save. And it will be a new system where it will be about transparency. blockchain technology, and commodities backing it with the ability to stand for delivery. No more promises that go unfulfilled. No more one country rules the roost. It'll go about from being one country or one system to a whole bunch of countries using their currencies, which mandates fiscal responsibility and settlement in gold through a multi-jurisdictional chain of vaults that then gives credibility to the whole system and veracity and instant settlement and instant auditing on a digital blockchain network.
Huh. You know, one thing that's ringing with what you're saying is follow the smartest guy in the room. And the people that understand the monetary system the best are the central banks. And what they're doing is they're hoarding gold.
Yes.
And so if you can do that on a micro scale as an individual or with your family or, with you and your family, um, you're following the smartest guy in the room.
100%. And it's not, don't look at the price. Price is being used as a tool of misdirection. Eric Young on Twitter, one of my favorite, King Kong on Twitter, it's like YEUNG. He talks about, he's in Hong Kong. He says, China's doing the same thing. They're shorting the silver price in the West and buying it up everywhere else where it doesn't have the impact on the price. They're playing the long game. They're using the suppression of the Western paper market the way that all these countries are who are now sophisticated, coordinated, and motivated, and are using the Fugazi manipulated price of massive rehypothecation of gold and silver futures contracts to stand for delivery. So it's not just that the most well-informed traders, to your point, not just the wealthiest, but the most well-informed, the central banks, not just that they're buying, but the bigger indictment to me is that they're buying and removing from the Bank of England, removing from the New York Fed. Over 40 central banks have done that. Give us back our gold. It had been left there for 50 years to give direct access to the LBMA and the COMEX. Safe jurisdiction, Western jurisdiction, rule of law, etc. Yeah, that's okay. We'll forego the convenience. We want it in-house. And now add on to it that you have the United States for the first time in my 35-year career as a net importer of almost 100 billion in gold since November, a net importer, probably the biggest importer on the planet right now, draining the exchanges in London to do it, where the LBMA is a T+1 settlement, meaning if you have bars in London, I stand for delivery. T is the trade day plus one is settlement. The third day the metals should be moving. Sorry, they say it's 8 weeks delivery, T plus 8 weeks, because the Bank of England evidently has a shortage of manpower and trucks. That's what they say. Not enough trucks, not enough manpower to move. We have such demand. You look at a graph of their holdings, they're falling straight down on a 45-degree angle. The world is standing for delivery using the Western paper price as a cover to accumulate. So yes, the central banks, yes, the sovereign wealth funds, but who is it here in the United States? Who's got that kind of bread to stand for 100 billion in delivery? Who? Um, I'll leave that up to you all to figure out. I don't know because they don't tell us. But is it the government? Is it the Treasury? Is it the Fed? Is it Buffett? Is it Bezos? Who is it? Maybe we'll find out someday. But my guess is that this is a bigger follow. Basent is a gold bug. Judy Shelton talks about this. Trump says he who has the gold makes the rules. All of these things taken together, these crumbs, massive deliveries, not just around the globe, but now in the U.S. I don't know. You tell me. Occam's razor would say what is the simplest explanation? That gold is really important, far more than the price would lead us to believe, because the most well-informed traders in the globe, their actions say that. Forget about price. That's the easiest way to misdirect the public. You misdirect them with volatility, rhetoric, and price action, yet it continues to go higher. But with a great deal of volatility, it's not sexy and moving up, triple digits like Bitcoin is, but it's outperforming every traditional asset and nobody knows it. Nobody. Ask your buddies back home when you're not wearing your in it to win it tie and you're just talking to your buddies, how many of them would know that gold outperformed all the major assets? All of them. Nobody does. And so that's the point. Through volatility, through lack of rhetoric, through lack of anything pro-gold, yet the biggest money in the world is showing you through deliveries and acquisition that it's far more important than the narrative would lead on to believe. Yeah, I think this is honest to God, Steve, I think this is a once-in-a-generation shift away. Just like all world reserve currencies rolls and runs come to an end. This is a big one, maybe bigger than ever, because of the globalization of the world and the digitization of the world and the way information spreads around the globe so rapidly. I think that's what's happening. And we'll see if history says I'm right or wrong, but I do believe that's what's going on right now. It's this little by little reset instead of the bang.
Yeah.
That bang may come, but not until the pieces are in place strategically, and you can see that they are being put on the board in that manner right now.
Yeah. What are you seeing as a dealer? So you sell gold, you sell silver, you sell platinum, you sell palladium. Over the last year or so, what are the fluctuations in percentages as far as like volume of sales?
For the last 3-4 years, silver has led the way.
Okay.
I think there's a big rush to get gold over the last year, and that would be from very, very wealthy players. During from February 2021 through 2023-ish, you had the silver squeeze, the Wall Street silver crew, and silver, people were buying it to become wealthy. Big mistake. You ultimately will if you own enough of it. It is wealth. You don't buy it to get wealthy. It's the wrong place. You own enough, you will be eventually. But you have to have a long enough time horizon. And so the retail market became a little bit over the last couple of years soft as people who came into it for the wrong reasons are bailing and going to the risk on trade. Bitcoin, Nvidia, Apple. It's really interesting too, because if you look at it right now, since the beginning of the year, the institutionals have been selling every week. Since the beginning of June, the institutionals are selling equities on average 2 billion a week. And at the same time, the retail mom and pop have the largest exposure to equities ever in the history of the markets, ever. Even more so than the dot-com bubble, ever.
Wow.
So mom and pop are buying equities and selling commodities, and the insiders are selling equities. 6 out of 7 insider trades are sales right now. Look at Bezos, Zuckerberg, look at Buffett. They're all on the sidelines. But who's standing for delivery in the commodities? Well, these are the most sophisticated investors in the world that are draining the COMEX and the LBMA. So let me just put it this way. What could possibly go wrong with the retail investor loading up on equities and foregoing commodities, but the institutionals dumping equities and loading up on commodities? Who's going to be right?
Right.
So what have I seen? I've seen the people who know what's coming buy large amounts of gold. And there are those that are still looking and understanding the value found in silver. And business is very strong, but nowhere near as strong as it should be, because people don't react. That's why so few people ever succeed in investing, because they have to see it with their own eyes. The guys like Rick Rule putting on this show, I'll tell you, every time he's made money, he's been buying when no one was buying it.
Yeah.
And he will tell you that the most money he's ever made is when there was blood in the street and everyone said you're an idiot for owning it. And look at him now, he's a centimillionaire, and putting on this show. My point to you is that if you think mom and pop retail investor know where things are going over the institutionals, then buy Nvidia and Bitcoin and dump gold and silver. If you think otherwise, then do what they're doing, and that is to mitigate exposure to the legacy system, whether it be the banks or the equities, and to buy commodities. That's what I see happening.
Yeah.
And it's a shame that our legacy media doesn't speak this way. Instead, they would have us all believing that the road to retirement is only paved with stock certificates and mutual funds, and I think it's a big mistake. So great value to be found in metals, lowest premiums I've seen, great availability, but that changes like that. Because at the higher level, the bars are becoming impossible to get. The bars, the 1,000-ounce silver and the 100-ounce gold or the 400-ounce gold, those are being gobbled up. Well, those are the bars that are used to make the coins that the sovereign mints make. So it starts up here, it will trickle down. You'll wake up one morning, something will collectively trigger the collective psyche of the public. They'll want to buy it, and overnight it'll all be gone. And I do believe, 1,000%.
Yeah. What do you see with platinum and palladium? What percentage of your sales come from those two?
Not very much. Platinum is gaining more attention.
Okay.
U.S. Mint hasn't made platinum eagles in going on 3 years now, and so platinum in and of itself is hard to get, high premiums, but the argument is the same as it is for silver, very similar. I would say there's great value. I mean, when you look at platinum and palladium, the major hubs of mining, of resource, is in South Africa and in Russia. So you're talking to the BRICS members. It's a smart play. I would buy platinum right now. But to me, the world thinks of wealth, money, it's gold and silver. I mean, you go back, gold was mentioned over 400 times in the Bible, silver a couple, 300 times. Together, it's like 700 times that they were mentioned in the Bible, the two of them together. And, uh, you know, you don't see that in platinum and palladium. Platinum's 30 times more rare than gold. It's a compelling story, and I think there's great value in it. It's just hard to get right now. There's very little supply, even though the narrative and the story is smart. To me, I'd buy gold. I'd buy silver first, then gold, then platinum.
Okay. All right. And if people want to get a hold of you and follow your work, how can they do so?
Well, we have our Miles Franklin Media YouTube channel. The best way to get our price list, there's about a dozen reasons why I don't list those prices online. We list some prices for very small orders online. But if you want the most competitive price, which will be as good or better than every company in North America, send us an email at info at Miles Franklin. Mention that you saw me here on the In It to Win It podcast. You can ask any questions that you've heard me talk about here or anything that's on your mind related from precious metals IRAs to geopolitical events, macroeconomics, or I just want the price list. If you want to be contacted, say contact me. Put your phone number down. If you don't get a response within half a day or less, check your spam. 1 out of 20 emails will get flagged as coming from a server that is a corporation like mine. So info at milesfranklin.com to get our price list or get any questions answered. No obligation. You can even say, don't contact me, just want the prices, whatever you want. And then, of course, I do 12 to 15 of these a week. We just brought on Michelle McCory to run our channel to expand our reach because, she has a big connection in the Bitcoin community. And whether or not you like Bitcoin, I think the Bitcoin community and the gold community largely see much of the world the same way. The Bitcoin community goes to make profit, we go to preserve it. So whether you like it or not, if you never listen to other arguments, you never grow. You learn more and more about less and less till you're an expert on nothing. And so I think the idea is that our community, our message, and our portfolios are stronger if we're aligned, if we're harmonious instead of adversarial. So our attempt is to, much like what you're doing, broaden people's horizons. And they can find that on our channel or just reach out to us at milesfranklin.com or get the price list at info at milesfranklin.com.
Okay. We will put a link down below for you guys. You can just click on that or contact Andy directly through info at milesfranklin.com. And Andy, always a pleasure. Thank you for coming back.
Good to see you again, brother. It's been a nice journey getting to know you and watch your channel grow, and I appreciate being a very, very, very small part of it, and happy to come on anytime you'll have me. But thanks for today.
Yeah, thank you. Pleasure's all on this side of the table.
It's right down the middle.
All right.
Thank you, brother.
Yes, and thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.